How's it going, guys? Welcome back to the YouTube channel. Um, Today we're going to be going over the EURUSD trade breakdown that I uploaded yesterday, and I'm just going to give a quick recap of what has happened since then. So here was my long entry on the euro dollar at New York on the 29th of June. Right. So I got into this trade. I expected a run below the equal lows, so I should have been a bit more patient actually. But yes, we did get that run below, and I took another entry down here. As you can see, my long entries down here. I took two long entries down here in addition to this one here. And what happened was we had this the price played around this area for a little bit, and then we had a bullish engulfing candle. Now, at this point in price, I actually expected to see some sort of a breakout of this trend line, which we use trend lines, but we do not respect them. We want to see trend lines get violated. That is the style that I trade with, that we trade with at Scale Up FX. We want to see trend lines get violated. So my expectations was, well, get a run towards on the 1 hour, get a run towards this short-term highs, maybe get into 1.900 like I said in the previous video, and then possibly tank from there. But we did not get that. Instead, today at New York session, we actually saw some shorts, and I woke up a bit late, but I was able to close out my trade before the stop loss I set was hit, 30 pips below my entry, and also accommodating the spread. So let's go to the crux of today's video. Today's video, I'm going to be talking about Gbpusd, while also actually showing you guys a bit of what I've been doing live on TradingView with a paper trading account. Let's just go over that for a bit. So I will show you the account history. I actually started this account on the 21st of July, as you can see down here. I started with $100,000. This is a paper trading demo account on TradingView, by the way. I've started using TradingView for live executions because this is really where I do the bulk of my analysis before sending it out to the free Telegram community. As you can see here, just going over the account history. We started this account on the 21st of June 2021, so about a week and a half ago, and we started at $100,000, as you can see here, balance $100,000. I set commissions up for this account as well, so it makes it feel like it's actually a real account. So essentially, any position that is entered, I am being charged as a commission because that is what actual brokers would do. Right, so I set this account with the intention of risking only 2% and seeing how far I can take it by the end of the year, pretty much. And my goal right now is to get to $500,000 from $100,000, and after that, my goal will be to take it from $500,000 to $1 million. And I plan on documenting that whole process on the YouTube channel for you in all of these videos. Since all the analysis I'm going to be doing is going to be on TradingView, I might as well show you as I build the account. So we had the 21st of June, start of the account. I took a couple of trades, had a couple of big wins. As you can see, had this $36 tiny win here. I had a about $16,000 win here, about a $18,000 win here, a $1,500 win here. Then I lost about $4,000 here on Euro NZD. I lost about $9,000 here on gold. That's why it's about 9,000, because it's gold. And then right after that, I won a trade of about $44,500 on the same gold. I had about $5,000 added to the account from GBP JPY, another $4,000 on GBP USD, $2,000 GBP JPY, $2,000 GBP JPY. I had a loss here, $3,400 on Euro NZD, $5,500 on GBP USD, $1,000 GBP USD, $5,000 USD CAD, $4,000 NZD USD, $800 AED USD, $600 NZD USD, and you can see just a couple of small wins all the way here. Then we had this nice win about $5,000 Euro JPY. Had a couple commissions, as you can see. Then lost GBP AED about 4,000, 3,700. GBP NZD lost about 10,000, which was bad on my point. I did not apply the proper risk management I would have liked to apply for this trade. This is a bit of a lack of oversight on my part. Moving on, we made about $1,500 GBP Euro NZD. On gold again, we made $18,000 on gold. We made about $15,000 on gold, and about $31,000 on gold. We had about 6,600 on gold again, 14,220 on gold. We had about 5,000 on GBP JPY, about 2,800 on GBP JPY, 500 on GBP JPY. Then I lost about $12,000 on GBP USD for a trade that I took July 1st, which was actually it was a weird trade, and I'm going to talk about it, right? Then I lost $1,000 on Euro NZD this morning. I should have been more patient again. This is partial positions for the trade I'm currently in on GBP USD shorts. I lost about $4,000 on USD CAD. I lost about $8,000 on Euro USD, which I closed, this is the Euro USD that we were in yesterday, and I talked about in the first video breakdown. I lost about $5,000 on Euro GBP. So in total on this account, really, I've been able to do over 100% gain in less than 2 weeks, which is really, really amazing. You really don't get to see that in the foreign exchange market, and I'm glad I'm able to show it to you live. And yeah, we'll be able to go over all this growth at the end of when I reach the target at 1 million. Yeah, so this morning I sent this out to the free Telegram community based on the fact that I'm just going to turn on my session breaker here, and we're going to talk about GBP USD, right? So I'm just going to take this off. No, first of all, let's talk about this. So the first thing I'm going to talk about is the position sizing on this trade. I've already secured some partial profits, as you saw in the trade history. I used a stop loss of about 25 pips. I made sure that our stops were above this short-term high. Price could have definitely traded through it because you can see here we have some sort of equal highs formation. Oh wow, okay, so that's interesting. I love to see equal highs because you know that somewhere here there's short-term liquidity being pulled to this level. So I'd say to the upside, the drawn liquidity will be above this high, short-term high. So that's why we set the stop loss just a little bit right above, and then we set our take profit down at the next support level. So on a higher time frame, you can see that our next support level is actually at this area at 1.37250, which is an institutional level, right? So what do I expect price to do now that we've taken out this low? We could definitely total soup this low. Total soup is a term developed or coined by Michael Huddleston, which is the inner circle trader. Most of you may know about him. I use some of his concepts. Great guy, absolutely magnificent trader. I really respect him. But yeah, we could have just total soup this low and then trade higher, but we'd have to see because as you know, today we have NFP, right? Non-farm payrolls. We have the Canadian PMIs. We have US unemployment rate. So it's going to be definitely an interesting one for the dollar and all dollar related pairs. So let's go back to the breakdown on how this trade was taken. Right. So as you can see, okay, we had a 1 to 3 risk to reward on this. We've already secured more than 60% of our position at 50 pips in profit. Great trade. Funny thing is, I was looking to go long early this morning. Towards the beginning of the New York London switchover session, we had this run below this lows. So a lot of people may be trying to go long here, thinking this was a total suit of this low. Saw this impulsive move and tried to get in on it. But at New York Open, on this is the 15-minute time frame, I started to watch as price chopped up at this area. And if you notice something about this area, so this is the start of the day, this is the ending of the day. Something about this area is it's going to be a sensitive area because this is the last bullish candle, right, before expansion to the downside that took out the major support levels, right? So you can see major support here, major support here, major support here. This last up candle, this is the last up candle before the violation of all the lows prior. And we see that price traded back into this candle, right? Gave a rejection here, gave a rejection here. And you can see, I don't know if you can really see this. This is where I took my entry this morning at 7 o'clock Mountain Standard Time. 7 a.m. Mountain Standard Time. I took my entry on this candle here and set my stop, like you saw, above this short-term high, and just waited for price to chop around it and really just traded through, right? And breakdown on entries for this trade would say, I would say I took it on the 5-minute. As you can see, we had run, we took out this really tiny highs on the smaller time frame, took out this highs, took out this high, created a new high, traded down a bit, then took it out. Now if you notice, this entry lines up with the crux of New York session being traded here. We had this step down. This would have looked like a break and retest to trap a lot of retail traders long. So a lot of retail traders would have seen, okay, we were stepping down from here, sort of here. We got this kind of step down formation here, here, and then we had a break of these previous highs here, and then retest, and then we kept stepping up aggressively. So we've taken out these highs, this really short-term highs, and we keep making higher highs. So notice that this lines up with 6:30 a.m. New York time. Sorry for sniffing. Notice that this lines up with 6:30 a.m. New York time. What do we want to see here? We want to see a fake out around this period because everybody's trading New York. Everybody's trying to get into the excitement of the markets, trying to continue with the move setting up from the switchover. And then we see the market has been breaking structure on the lower time frame. So we see this break above. Now, right here, this previous point here is where a lot of people are gonna try and get long. Why? Because this lines up with 6:30 Mountain Standard Time, which is 8:30 New York time. It lines up with the crux of the New York Open, so the bulk of the volume is coming into the market here. So what do we get? We get a quick run above this short-term high. Now, institutional traders, people who know what the banks want to do, understand that this is necessarily not really the bigger picture of where the banks might want to go. This might just be a retail trader enticement setup, and fortunately for us, it trades to this order block, 5-minute order block, which is the last up candle before the move that breaks significant support levels. We had some sort of relative equal lows here, so it was almost obvious that we're gonna take this, we're gonna take out these lows. So prior to this move to the downside, it was pretty obvious because this is the London pre-London run. So midnight pricing, as you can see, midnight, we had the pre-London run with the double bottom formation. After total sweeping these lows as well, double bottom formation gives every buyer an opportunity to grab a few pips, and then what does it do? Absolutely smashes through their stop loss. So this is the type of thing we want to see as well in the New York opening. We want to see a fake run above highs and entice retail traders long. So what do we see right after we close above here? We get an engulfing, then we get a doji. Now you can see that the red arrow comes in the doji, which means this is where I executed this trade. I like dojis because they confuse people. They confuse retail traders. Retail traders think, okay, we had an engulfing on the 5 minute, price has been breaking highs. We've seen a doji, it means exhaustion, we continue long. So accumulated a lot more orders here, already triggered people's buy stops in here, then accumulated a lot more buys in here, and then what do we get? We get a bit of drawdown. We get another hammer candle forming, enticing people along this small W structure. So we get this, then we break all these, we break this 1 2 3 lows, which will confirm a short type of setup, since as you can see the trend has already been bearish in the long term. So what do? We trade a bit higher into this rejection block. So this bearish engulfing, 50% of it will be your entry if you're waiting for the optimal entry, and then we absolutely trade lower towards the end of the day. And something that I'd like you to notice here is, see how we have the head and shoulders pattern forming right at New York Open. It doesn't get nicer than this. It really doesn't get nicer than this. You have a head and shoulders pattern forming. You have a narrative of how the markets want to fake out, the markets want to fake out all the, sorry, it's just switched right now. The markets want to fake out all the people going long, and then they absolutely go short. So that was GBPUSD for New York session on the 1st of July. Absolutely smasher of a trade. And yeah, so that was the narrative. So what would I like to see going into London session? Now, this is the beginning of the day, so the last day of the week. Now, my bias has been, would I say, kind of, I might be staying on the sidelines, I might not, it depends. If I see a short setup, I will take it. Medium-term short setup would be towards the midnight price, so around this area. I'd like to see a run up into this high, into these highs, a run up into these highs, and maybe we can just see a quick drop in London and then get out of the trade before NFP, or what, secure your entries right before NFP. I'll just see how it plays out. But yeah, I'm definitely looking to continue short on GBPUSD, and here's the reason why. This is also one of the reasons I took the short trade at New York. Usually the high or the low of the week would form between Tuesday and Wednesday. So between Tuesday London session, Wednesday New York session, right? Today is now Friday, 2nd of July. We had Thursday, Wednesday, Tuesday, Monday. So Monday's price action traded lower, into Tuesday's price action traded lower, Wednesday's price action traded lower, Thursday's price action traded lower. And the reason I went short as well this morning was because we broke Wednesday's low. Right now, the break of Wednesday's low kind of signifies that, yeah, price doesn't really want to have a midweek reversal back higher, because I was expecting we'd see something like this from this low formed here. We'd get something like, so we had this W formation, we have a break retest, and then we absolutely smash through all these highs, come in here to this order block and then trade back down, but we did not get that. We could get that through the influence of NFP. So all of this move down could just be one to entice people to keep going short. Remember, definitely, who are the people in the most profit in this market right now? Is definitely the people who are holding short. So what I would like to do is, while GBPUSD, I'm still overall very bearish on the larger time frames, as you can see with this big daily push up. What I'd like to see is, I'd like to see a run into this block, into this sort of breaker block, short-term daily breaker block, and then possibly a trade lower into this demand zone. So if you notice this area here at 1.7 1.717, it's a very key area here, and right below it we have equal lows at 1.67. Now, what do I entirely see GBPUSD doing? On a larger time frame scale of things, I want GBPUSD to trade something like this. Entice buyers here, maybe form like a consolidation, go in here and then absolutely wreck all these guys. Trade down into this demand zone, maybe even take out this low, and then absolutely begin its trend higher, right? Maybe even back into 1.41, right? So that's how I see GBPUSD panning out, but I'm definitely short. Now NFP could come in here and I could take longs, but that just depends on what I'm seeing in the market, how price has been moving through London session. Now let's get a quick rundown of the DXY. The DXY is very important because it allows me to understand certain things that happen, that occur in the marketplace. And I want to go through something I've also learned through my years trading, which is something we call smart money divergence. Now, on Euro USD, notice that between 11 p.m., so 23 o'clock, between 23 o'clock and about 6:30, we're making higher highs on the euro dollar, and between 23 o'clock here and 6:30, we're making lower lows, right? This is the type of correlation we want to see, because we know that if the dollar is selling off, the euro should be buying, should be rising in value, right? What do we see? So 23 o'clock and 6:30, we see high and low, and here on euro dollar we see low and high. Now let me take you back to a key point on how to have caught this move in the London session. Very easy move. So remember, I called this 23.30 low. Notice how on the dollar at 23.30 we made a high and we made a higher high, right? At 2 a.m. we made a higher high, but at 23.30 we made a low, and at 2 a.m. we made a lower high on the DXY instead of making a lower low. Now this move did not reflect on GBP USD, because at 23.30 we made a low and we made a lower low at 2 o'clock 2:30. So GBP USD was moving in line with DXY. There was no divergence, but Euro USD had a very big divergence, and this is called smart money divergence because they're accumulating longs in the euro. That is why the DXY looks like it is forming a higher high, while the euro looks like it is making, while the euro is making low higher lows, right? So that there is the smart money divergence, and that could easily tell us that, you see how from this point on the dollar we're creating higher highs. So on the 30th of June 11 o'clock, 1st of July 1:30 a.m. and 1st of July 12:45 p.m. we see we're creating higher highs on the DXY. But on the euro dollar, we're not reflecting the higher highs movement of the dollar to create lower lows. Rather, we are having an accumulation in price. So while the dollar is climbing higher, GBPUSD is trending lower, which is what it is supposed to be doing. EURUSD is staying the same, which means something is off in the market, which means we do have some sort of smart money divergence here, and we should look if we're trading anything to trade the euro dollar, because it is now clear to see that we might get a bullish run today later in the London session on the euro dollar. So this is definitely something to watch out for. If we get the a bullish euro dollar, we should get a bullish pound dollar. But I'm of the opinion that we might see a bigger move, a more explosive move on the euro dollar because of the smart money divergence I've just talked about. So yeah, thank you guys. That's gonna be it for this video. I hope you like it. I hope you comment, and I hope you subscribe to the YouTube channel. There will definitely be more. I will make an introductory video of what this channel is really about, what I'm going to be doing, how I'm going to be carrying it out, and what you should expect from this channel over the next few months. So thank you so much for watching, guys, and I appreciate it.